whether or not Friday's session delivered the strength, the conviction, the force, the power that you normally like to see in a follow-through day, I'm going to go with what the folks over at Investors Business Daily are saying, and that the market trend is now upward, and it is okay to start nibbling at select stocks that you think have the potential to lead. I don't think there's anything wrong with that, and in fact, I started doing it last week ahead of Thanksgiving, bought a couple stocks, and I bought a couple more today. That'll be it for now. It is important that just because you get a buy signal from the market, it doesn't mean that you just buy stocks with reckless abandon, because what you want to do is just put on a few positions and see how they work. Are they bouncing all over the place as soon after you buy them? Are they up big? Are they down big? Up big, down big, just kind of showing erratic, volatile, all over the place action, and in the end they're just not making any headway? Well, that would tell you that there's no sense to continue to put money to work in the market if you don't have anything to show for it up to that point. On the other hand, if you bought some stocks last week, you bought some stocks today, and they are all above what you paid for them, they're all above the purchase price, well, that's a pretty good sign. Now you're in a position where you might even think about adding to the positions if the market is telling you that they're working. But you don't want to get too loaded up in the early stages of a market uptrend, because even though Friday was a sign of strength, it was a subtle, it was a sneaky sign of strength. It was, to me, it did not convey the strength and power that you want to see in a follow-through day. But the bottom line is that you did get it on the fifth day of a rally attempt, so that's right in that small window that you want to see, and I think a good argument can be made that the market could be ready to rally into the end of the year. So instead of arguing with the market and saying that Friday's price strength was not strong enough, it was only a half day of trading, there's not enough leadership out there, all that might be true, but if you look hard enough, I'm seeing some interesting opportunities out there. You don't want to be reckless. You don't want to be crazy. You don't want to just throw a whole bunch of money into the market. You want to just nibble selectively and see how the purchases go. Okay, so the holiday shopping season. We had Black Friday, we had the weekend, we have Cyber Monday today. All indications look like it's going to be a pretty strong holiday shopping season. Earlier today, the National Retail Federation estimated that 139 million people shopped in stores or online between Thursday and Sunday, up 6% from last year. They spent an average of about $423. Total sales up nearly 13% from a year ago to $59.1 billion. Meanwhile, ComScore said online sales topped $1 billion for the first time ever on Black Friday. They were estimating 1.5 billion sales today on Cyber Monday, and according to IBM, as of 3 p.m. Eastern Time on Black Friday, web-based sales were up 20%. From a year ago. U.S. online sales on Thanksgiving were up 17.4%. So by all indications, these metrics look very, very strong, and it could be a nice shopping season for many of the nation's retailers. So good news there. Let's see. Other news today, SEC Chairwoman Mary Shapiro stepping down after almost 4 years as head of the nation's the head of the SEC. Under Shapiro's helm, the agency has implemented 3/4 of all the rules required by the sweeping Dodd-Frank law, which was implemented right after the financial crisis of 2008. The SEC also has brought a record number of enforcement cases, 735 in 2011 and 734 so far in 2012. So a lot of people say that Mary Shapiro doesn't have a whole lot to show during her reign at the SEC, but she is stepping down after almost 4 years of service. Meanwhile, Eurozone finance ministers are still trying to convince creditors to release the next batch of bailout money to Greece before mid-December. That's when the country's next big debt repayment is due. So Greece in the headlines, but certainly today and perhaps a reason for the market coming back, at least the NASDAQ coming back the way it has something to do with these good holiday sales data that we're seeing. Yield on the 10-year note down sharply today to 1.66%. Money flowing into bonds. 30-year bond down to 2.8%. U.S. dollar index up a little bit to 80.24. That's up about 5 ticks or so. Gold for December delivery fell $1.80 today. Not much, 0.1%, settled at $1,749.60 an ounce. And oil ended its 2-session winning streak. Tight intraday trading range for oil today. January crude fell 54 cents, 0.6%, settled at 87.74 a barrel at the New York Mercantile Exchange. Some story stocks today. Let's take a look at Knight Capital Group. Some published reports in day saying that the company is considering a sale of all or part of the company in a deal that could be worth anywhere from $600 million to $700 million. I think Knight Capital's market cap, let me double check this, but I think its market cap is only about $400 million or so. Yeah, even a little bit smaller than that. But shares of Knight Capital up 19.3% today to $2.97 on deal speculation. Take a look at shares of Apple. Apple has bounced back nicely. It is still absolutely a technically troubled stock here. There's no question about it. If you've been long over the past 6 days, it was a very, very good trade. You've got a lot of profit to show for it. But as you can see, Apple is still trading far off its 52-week high, still underneath its 200-day moving average at 594, and still below its 50-day moving average at 619. But right now the stock is up $17.14, 3% gain to 588.64. Citigroup came out today, started coverage of Apple with a buy rating, set a price target of $675 on Friday. You probably read over the weekend that Apple added 6 more Samsung products to its patent infringement lawsuit against the Korean firm. Apple has asked the court to add all products using the ice cream sandwich and new Android Jelly Bean systems to its suit. Remember, in August, Apple won a $1.05 billion jury decision against Samsung. So this case still has a little more left to go, but Apple having a solid day today, up another 3% to 588.64. And how about shares of Facebook? We'll take a look at Facebook. This has really come back to life right around the same time Apple started to move. Shares of Facebook up another 7.6% today to 25.83. Has broken out over some fairly meaningful resistance levels here, so its technical picture has definitely taken a turn for the better. Sanford Bernstein upgraded Facebook today to outperform, lifted its price target to $33 from $23. So Apple and Facebook making some good moves today. When we come back, we'll take a look at Yahoo, Research in Motion. A lot of stocks moving out there. When you're in the early stages of a potential new uptrend, when we come back, I'm going to talk about the types of stocks that you want to be in. Not necessarily the beaten down merchandise, but stocks trading closer to highs. We'll do that in about 3 to 4 minutes. Breakout Investing on TFNN.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Masters Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Ken Shreve with you, back from a mini Thanksgiving vacation. Always good to be back in the Breakout Investing hosting chair. And folks, if you want to check out 30 days free of Ultimate Growth Stocks, that's my newsletter at TFNN, weekly newsletter. I'll be putting out my next weekly update tomorrow morning, and in between weekly updates I send out email buy alerts, sell alerts, market updates for the model portfolio. I have had a fairly significant cash position for some time, but probably over the past 7 to 10 days or so I've been adding some new names to the model portfolio in preparation for the possibility of a new uptrend here, and so far so good. So if you want to see which names I am adding to the model portfolio, check out 30 days free of Ultimate Growth Stocks. You can do that right on the homepage of TFNN.com in the breaking news section. It says try out Ultimate Growth Stocks in red letters. You can also click on the newsletters tab on the homepage and then investment newsletters. So been putting some money to work, but like I said at the top of the show, just nibbling selectively at this point, until hopefully what we're going to see from the major averages is more signs of strength, higher volume gains, lower volume declines. We just want to continue to see signs that new money is coming in from the sidelines. We did get a buy signal on Friday. I would call it kind of a mild buy signal. Again, like I said at the top of the show, but still a signal to start putting some money to work. Taking a look at shares of Yahoo today. Shares of Yahoo up 1.1% to 1877. My goodness, what a price run this stock has made since it gapped up on October 23rd over 1625, 1630, something like that. This is an example of an extended stock, a stock that clearly is under accumulation here, but very extended after its breakout in October over 1638. So you want to let this one settle down. You don't want to chase it up here. News for Yahoo today is that Goldman added the stock to its conviction buy list, raises the price target to $24 a share from $22. Goldman says the Yahoo's remaining stake in China-based e-commerce firm Alibaba Group could provide further upside to shares. So Yahoo has been in a very, very nice uptrend. It is an extended stock, though, some stock that you do not want to chase at current levels. At some point, it will base and consolidate gains. When it does, that will give you an opportunity to buy the stock if you so choose. How about Research in Motion? This one I kind of lost track of Research in Motion, but what a monster move this one has made. Another one that's tough to buy after 7-8 days in a row of gains. You had a big gap up on Friday. The stock follows through again today, up another 2.5% to $11.95. The stock has been under tremendous accumulation. That's one thing that can't be denied since late September. If you look back since late September, you see a lot of big blue volume bars down here, especially over the past 6-7 trading sessions. Big volume in the stock. Most likely enthusiasm starting to build about the release of the company's new BlackBerry 10. That's going to be debuting on January 30th. Today, CIBC World Markets upgraded shares and raised RIM's price target to $17 from $8. So bullish comments from CIBC World Markets today. Another stock that I would not chase after such a massive run. There are some emerging leaders out there. There's no question about it. We can check in on shares of Stratasys. Now, Stratasys up until today had been moving higher in low volume, but Stratasys on Friday eventually, or I should say finally, cleared a swing point of 69.08. Here was the swing point here back in October. You had a breakout Friday, good follow through today. You finally got some volume coming into Stratasys, but with a swing point of 69.08 and the stock now trading around 75.92, it got extended very quickly. So Stratasys, of course, they make 3D printers, rapid prototyping systems. An industry group peer of Stratasys is 3D Systems. Now, earlier today, Steve Rhodes from TFNN was talking about both of these 3D printing companies. What's interesting about 3D Systems is that it is still within range here. In fact, it is still trying for a breakout over 46.92. That would be its intraday high right here. Huge move for 3D Systems today, 10.3% gain to 46.03. So it's still sitting just underneath that swing point of 46.92. It is possibly within range here, but I got to tell you, both of these stocks are very, very volatile. They move a lot in the middle of a day, so you have to have a strong stomach owning these stocks. Other thing I don't like about 3D Systems is that if this is a cup with handle base, its handle area corrected 22%. That makes it a flawed stock chart. So I'd be careful with both of them at this point. You're listening to Breakout Investing on TFNN. We'll be right back, folks.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Ken Shreve with you. Happy Monday. Yeah, we're getting a lot of talk recently about 3D Systems and Stratasys. Companies, great technology is going to be around for a while. New innovative technology that's driving earnings and sales growth at both companies. But just again, to reiterate both thoughts, or reiterate thoughts I have on both companies, looking at a daily chart of 3D Systems here. And what you see here is a base that is setting up, no question about it. You've got a pretty clear swing point here of 46.92. From the naked eye, this looks like a cup with handle pattern, but it is a handle area that is very erratic, characterized by wide and loose price swings, and even though it is approaching a breakout point of 46.92, the correction in the handle area of 22% makes this a faulty chart. Now, can breakout breakouts from faulty charts work? Yes, they can, but you want to keep that in mind. Their shares are clearly under accumulation today. Very bullish price action, but you remember not that long ago, price action was very bearish in this stock, and it was going down 5 to 10% in one day. So you got to be careful with a stock like this because it's very volatile, and it swings a lot on an intraday basis. So this one has a chance of breaking out over 46.92. It has a chance to be a leader going forward, no question about it. Just a volatile stock that is tough to hold in what's been a volatile market up to this point. Now, Stratasys, you look at a daily chart for Stratasys, SSYS, and you see actually more orderly trading. Okay, so that's definitely a positive for Stratasys. A swing point of 69.08 was set here back in October, and you did have a breakout. Now it was a low volume move for several days. You finally have volume coming into the stock today, but at 75.81, it is now extended past that swing point of 69.08. So rather than chase it, you'd want to wait for a pullback here as well. The bottom line with these 3D printers is that neither of them, in my view, are clear-cut buys at this point. You could have bought Stratasys saying, this one looks like it has a chance of breaking out over 69.08, but volume never came into the stock, broke out in low volume. You typically don't like to see that happen. And now, volume finally in the stock today, and it's breaking out with conviction, but it quickly got extended past that 69.08 swing point. So love the business prospects at the 3D printer makers. They are just tricky buys at the moment. No economic data to speak of earlier today, but it's a fairly busy week. Tomorrow we have durable goods orders for October, the Case-Shiller Home Prices Index for September, and also the Conference Board will be out with its first reading or I should say it's November consumer confidence reading tomorrow. Wednesday, we've got new home sales for October, the latest look at the Fed Beige Book, a summary of anecdotal economic information around the Fed's 12 districts. Thursday, weekly jobless claims. We also have the second estimate to third quarter gross domestic product. After an initial estimate of 2%, the economy is expected to grow at a rate of 2.8%. in the third quarter, so that looks like a pretty good number. And then on Friday, personal income and spending and the Chicago Purchasing Managers Index. So a lot of economic data on the way. All right, let's take a look at CSGP. This is a ticker symbol that I have not talked about on this show for a couple of reasons. The company name is called CoStar Group. It is breaking out today in heavy volume. CSGB, this company is a provider of real estate information services to all kinds of people, brokers, developers, bankers, property owners, government agencies. Excellent earnings and sales growth here, but the issue is that it is a thinly traded stock. Only trades about 110,000 shares a day. It's a small cap, but a decent sized firm, $2.5 billion market cap. But CSGB, you do have a good breakout over 85 today, working on 5 straight daily price gains. Good solid breakout. Stock is under accumulation. There's a lot to like about it. Their full year profit this year is expected to rise 31% from 2011 and accelerate, rising 34% in 2013. So good earnings prospects. A lot to like about this company, but it's a small cap and it's thinly traded. So buyer beware. Good technical breakout nonetheless for CoStar Group, CSGP on the NASDAQ. Interesting to see the fresh market trade well ahead of earnings Wednesday before the open. The fresh market had a nice breakout on Friday. It was a low volume breakout because there wasn't much volume in the market. This is a company that competes with Whole Foods that is under quite a bit of pressure today. But the fresh market, we'll talk about this one first. It is down 2% to 61.14. I am expecting a good quarter from this company. It broke out over 61.82 on Friday. Volume was basically came in average, but for a half session, that was actually not too bad. But it is under pressure today. Again, down 2% to 61.14. Profit is expected to be up 37% from a year ago at the fresh market, 26 cents a share, with sales up 21% to nearly $319 million. The fresh market right now does most of its business east of the Mississippi. That's where most of their stores are. It has big expansion plans west of the Mississippi, very small presence in California, but the company will be expanding in California in coming years. So I think that the fresh market still in the early stages of growth here. Wouldn't be surprised to see strong numbers from the company when they report Wednesday before the open. Now, Whole Foods Market. I have not been quiet about the fact that this is a stock that is actually looking like a better short here than a better long, not just because of its price action today. It's down 3% to 92.24, but while a lot of stocks are building bases and making a case they want to be new market leaders, Whole Foods Market is doing the opposite. It is stuck underneath its 50-day moving average, and it is underperforming dramatically today. But you have to remember, Whole Foods back in November 2008, December 2008, it was a $9-10 stock, and from that point it rallied all the way up to about $92 a share. So it's made an incredible price move. All price moves eventually come to an end. So I think there's a handful of stocks out there that I'm not expecting to be new market leaders going forward. I would put Whole Foods in that group, and I did a piece on Priceline recently, another name that I just don't expect to lead going forward. Priceline is still technically challenged here. It is down $1.98 today to $639.93. Recently found support at its 50-day moving average, but you can see this 200-day line has been a tough nut to crack for the stock over the past few weeks. Once again, finding some resistance there. So, another Priceline, another big price move over the past 3 to 4 years. Not sure how much this one has left in the tank either. Some decent technical setups out there. Sometimes you find a good chart and then you do a little work and you realize that, well, it's a thin stock, it's thinly traded, market cap isn't that big. I really like the technical setup here of Medifast, MED. This is a distributor of weight and disease management products. Excellent earnings and sales growth here. This is just a classic example of a good cup with handle base. The issue here is that it's a tiny company, market cap of $450 million, so it's a micro cap / small cap, average daily volume of 143,000 shares. It does have some mutual fund sponsorship, which is a bright spot, but I'll tell you, when you look at its weekly chart here, you do have a very bullish technical setup, swing point of 29.96. Stock is trading at 29.20 right now, so you can't rule out an upside breakout for Medifast. But when you look at the whole ball of wax, yeah, you've got good fundamentals. Yes, you've got a bullish chart, but are you looking at a liquid institutional quality leader? Probably not, because of its small market cap, plus the fact that it's thinly traded. So a breakout could work here. The chart is saying that it wants to break out. You do have good earnings and sales growth as well, so there are some positives here. I'm just not keen on the fact that it's a small, thinly traded stock. 877-927-6648. Let's talk to Red, Orlando, Florida. Wants to talk PCS. How you doing today?
I'm doing fine. I hope you had a good turkey day and all that kind of stuff.
Absolutely. Yes, I did. I was up in I was up in beautiful Santa Barbara, California, in wine country, and
boy, yes,
yeah.
I did all my high school time down in South Orange County in Westminster and Garden Grove, and that was the best growing up that could have possibly had, But it's all changed. It's all changed by now. That was back in the 60s.
Yeah.
It's all filled in almost to San Diego, I'll bet, by now.
It's pretty crowded down there. I might make it down there infrequently, but I travel down the 405 and the 5 on my way to San Diego, go through Orange County for sure.
Yeah. Yes, sir. PCS. After hearing you early in this last segment and what IBD said and this, that, and the other, I was previously preparing for shorts because I saw all these ABC downs. But when I looked at PCS, he looks like he's trying to make a little ABC up. So I figure I might long him as soon as he moves a little bit.
I'm not sure. I'm not sure about that. I mean, this is a pretty decent company. Gets pretty good ratings from IBD. But Red, you've probably heard me talk about when a stock breaks below support, how that support can often turn into resistance. So I would wait on PCS. And right now you're looking at a swing point that was set just a few days ago. It's going to be 1140, the high set on November 19th. If it can take that out with some volume, then you may have a long play here. But the fact that on November 19th it tried to move above that 50-day moving average and stalled, and is now the past 4 days trading underneath there. It's not a long yet. It's not a short yet either. But
okay. Yeah. Well, good. I'll this B to C leg might be longer than I thought. I mean, for the market as a whole.
Yes.
In other words, I was watching all these beautiful ABC downs and all the indexes and all the big ETFs, and I said, oh boy, here we go, short time. But now things maybe they'll go a little higher before the C leg than I thought.
Yeah, again, Friday I was a bit surprised to see the call that IBD made. I mean, I was surprised. I don't know that I've ever seen a follow-through day occur on a half day of trading.
Exactly.
And so I think what they did was they projected volume out, and the percentage gains were good, but I always remember Bill O'Neill telling me that follow-through days should really convey power. They should be forceful. They should not be begrudging, and it just seemed, on a half day of trading, I mean, how powerful can it be, right?
I know. Even if you double it, like you said, it's not that powerful. But you can't argue with what's going on with RIM and the other ones you were talking about earlier. You can't argue with that.
That is true. That's the bottom line, and it's why I've been putting nibbling and putting some money to work for sure.
Sir. Okay, so I'll watch this PCS. He gets above that and with a little more volume,
1140.
Maybe I'll nibble on it.
Yeah, 1140. That November 19th high is.
Yes. There you go.
That's the one. So let that happen first, and then maybe you can go long.
There we go, sir. All right. Thank you, sir, for your help.
All right. Good to hear from you, Red. Thank you.
Okay, bye.
All right. Good to hear from Red in Orlando. That's the funny thing about this market is that I can go through my screens and still find, stocks where I can say with relative certainty are not going to be leaders going forward, and in fact their technical pictures look more bearish than bullish. But when you see a lot of stocks moving higher, and you see the big percentage gains that we saw Friday, and you see the market doing a pretty good job holding on to those gains today. You can't rule out the possibility of more strength between now and the end of the year. Now, of course, the bears are going to say, well, the bull market started in March 2009. It's only a matter of time before the sellers come in again. We've got the fiscal cliff that the market is still dealing with. We've got Greece. We've got fourth quarter earnings season. But again, when you look at Black Friday, Cyber Monday, the online holiday shopping season looks to be very, very strong. What that means for fourth quarter earnings, we'll see. But Apple has certainly bounced back to life, and more and more stocks out there are acting well. As Red says, you can't argue with the market. Time to go with the flow for now. All right, folks, you're listening to Breakout Investing on TFNN. Of course, we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Today we're going to go to Mount Vernon, Washington, talk to Roger, who wants to talk Sarepta Therapeutics. How you doing today, Roger?
Pretty good, Ken. How about yourself?
No complaints, sir. No complaints.
You got all your Christmas shopping done?
No, not at all. Not at all. I'm one of those, kind of late shoppers, but I'll get it done as I always do.
There you go. Yeah, I'm kind of curious with this stock. It looks like it's got some volume today, and look, I don't know if that's short covering or just what. It took that big spike back in, when was it anyway, on October 3rd.
Yeah, the interesting thing about Sarepta is that it never really has, I mean, I know the short position right now is virtually non-existent in the stock. So, I'm sure if at one point it did have a short position, relative to, the thing about Sarepta is that it's very, very liquid. It trades about 2.5-3 million shares per day. So, short interest has never been, based on its average daily volume, has never been that high in the stock. And, what you have here is clearly a stock that's under accumulation, showing, very good technical action at this point. Its chart looks fine to me. And you probably have, with the market acting the way it is, probably not too bad of an entry point here. The way I go about the market, Roger, I'm sure you know, is that, I like profitability and I like, meaningful earnings and sales growth, and that's what you don't have at Sarepta. You've got a bright future, but, this year, next year, they're going to be losing money for the foreseeable future. Technically, it's strong. Fundamentally, still a bit questionable.
So does it look like a swing trade then?
It could be. It tends to keep its price swings on a tight leash. I like the fact that it came down to its 50-day moving average, right around 20, 21, $22 a share. Has firmed up. You're working on 4 or 5 days up in a row. So if you do, you keep a tight stop, whether it's 3%, 5% below what you paid for it. So it looks okay from a technical perspective, but fundamentals are a bit in question, like I said.
Okay, I didn't know what the fundamentals were. I didn't get any history on it or anything, so I didn't know quite. They're
losing money, and they're continue to lose money. Fiscal 2012, 2013, they did in their third quarter. They only did about $7.5 million in revenue, which was mostly flat from the. From the year ago. So again, it's under accumulation. It has its positives from a technical perspective. After 5 straight up days, maybe you wait for a little low volume pullback, try to pick it up around 27, 28. Might be a more palatable entry point, but again, not one that's on my radar just because it's missing the fundamental side of things.
Okay, that's what I was worried about.
Yeah.
Yeah, I didn't know quite what its history was. It looked like it was wasn't it like a buyout candidate, or did get bought out? That was the reason for the spike off of 14.
Yeah, I remember something. It was in early October when it made that huge move. It wasn't a buyout offer. It wasn't. A company didn't say we want to buy you for this amount of money. I don't. I'll double check the news and maybe we'll discuss that on tomorrow's show. But I got to run for now.
Okay. Thanks, Ken.
All right. Thanks, Roger. Take care.
You bet.
All right, folks. Wrapping up Breakout Investing. Appreciate the phone calls. I'll be back tomorrow, 3 o'clock Eastern, for another edition of my show. Coming up Tuesday earnings. We've got Rawcore, Focus Media, FMCN, and PVH. Have a great afternoon. I'll see you tomorrow at 3 o'clock Eastern.